Welcome to my YouTube channel. As the government have launched a new tax regime under income tax and gave an option to choose, many of you might be eager to know the differences. I am Prajakta Kulkarni and let us understand these tax regime a bit in detail. Over the years, the government, through addition of clauses to the Income Tax Act, has given Indian taxpayers over 70 exemptions and deductions, options through which they can bring down their taxable income and hence pay less. While exemptions are part of your salary, like house rent allowance HRA and leave travel allowance LTA, deductions allow you to lower your tax amount by investing, saving, or spending on specific items. The biggest section for deduction is Section 80C, through which you can bring down your taxable income by Rs 1.5 lakh. Apart from this, there are several other sections that let you take tax deductions on things ranging from interest on your loans, home and education, to premiums you pay for health insurance. New tax regime, more tax slabs, lower tax rates. It came with the catch of removal of all deductions and exemptions. The new tax regime saved taxes for taxpayers who don't claim any deductions or exemptions. It is applicable for income earned from 1st April 2020, FY 2020-21, which relates to AY 2021-22. Comparison between existing and new tax slab rates. This basic exemption of Rs 2,50,000 is applicable for the assessee who is below 60 years of age. The existing tax rates are 0, 5, 20, 30, while the new ones are 0, 5, 10, 15, 20, 25, 30, with increasing slab of Rs 2,50,000 each. Basic exemption limit for senior citizens above 60, below 80 is Rs 3 lakhs. Super senior citizens above 80 is Rs 5 lakh. As per the latest budget 2021, senior citizens above 75 years of age need not file ITR. Is the new tax slab beneficial? Under new tax regime, more slabs, lower tax rate, but no way to reduce taxes. What about rebate under Section 87A? The amount of rebate under 87A for FY 2020-21, AY 2021-22 has been kept unchanged under both old and new income tax regime. A resident individual having taxable income up to Rs 5 lakh will get the tax rebate of Rs 12,500 or equal to the amount of tax payable, whichever is lower. Is the standard deduction of Rs 50,000 available in the new tax regime? No. Will TDS be deducted from salary under new regime? Yes, it will be deducted when the employee's salaried income is taxable. Exemptions and deductions not claimable under the new tax regime. Standard deduction of Rs 50,000. Professional tax, entertainment allowance, children education allowance, house rent allowance, leave travel allowance, minor child income allowance, helper allowance, children hostel allowance, interest on housing loan section 24, chapter 6A deductions from 80C to 80U, family pension income. Except section 80 CCD subsection 2 and 80 JJAA. Section 80 CCD subsection 2 deals with employer contribution to employees' pension account. National Pension Scheme NPS is the scheme notified by the central government. Section 80 JJAA is applicable to any assessee having income from business and is liable for the tax audit under Section 44 AB. What are the exemptions and deductions available under the new tax regime? You can claim tax exemption for transport allowances in case of specially abled person, conveyance allowance received to meet the conveyance expenditure incurred as part of employment, any compensation received to meet the cost of travel on tour or transfer, daily allowance received to meet the regular expenditure incurred on account of absence from his regular place of duty. A salaried taxpayer can opt in and opt out every year. That means you can choose the new tax regime in 1 year and choose the regular tax regime in another year. Once a non-salaried opts out of the new tax regime, they cannot opt in again for the new tax regime in the future. Now, let us know the deciding factor. First, calculate all exemptions that you are availing: HRA, LTA, food vouchers, phone bills, etc. Look at the deductions that you claim: standard deduction, employee provident fund, LIC, home loans, etc. Now combine these exemptions and deductions and subtract it from your salary to get the taxable income. Now taxable income will be the deciding factor which tax regime to opt for. Shilpa earns rupees 13,50,000. She is eligible to claim rupees 30,000 as HRA and rupees 20,000 in LTA and rupees 15,000 under 80D. She has utilized the complete limit of ATC by investing in LIC and EPF. Let us see her tax liability. Taxable income under existing tax regime is 10,85,000, while under the new tax regime is rupees 13,50,000. And we can see that Shilpa saves rupees 12,000 under existing. Anjaneya earns rupees 21 lakh per annum. He avails the full limit of Section 80C through combination of EPF and ELSS. Besides this, he pays health insurance premium of rupees 25,000. He claims rupees 25,000 as LTA and contributes to NPS rupees 30,000 to save more taxes. Let us see the tax. Total exemptions and deductions are rupees 2,80,000. Net taxable income under existing tax regime is rupees 18,20,000, while under the new tax regime is rupees 21 lakh. The existing seems beneficial for Anjaneya. Let us take another example. Say gross salary is rupees 8,40,000. Deduction under section 16 is 52,500. Therefore, income chargeable under the head salaries is rupees 7,87,500. The house property loss of rupees 2 lakh can be easily set off against salary income. Thus, gross total income is rupees 5,87,500. Further, Chapter 6A deductions 80C and 80D comprises of rupees 1,57,200 and hence the taxable income is 4,30,300. Now, under new, the taxable income will be rupees 8,40,000 and tax will be rupees 51,000. While under existing, the taxable income is rupees 4,30,300 and the tax is rupees 9,015, which will be nil as eligible for rebate under section 87A. Let us take one last example. Here gross salary is rupees 5,77,300 and deduction under section 16 amounts to rupees 52,500. Income chargeable under the head salaries is rupees 5,24,800 and gross total income is the same. rupees 1,40,000 under section 80C, and hence taxable income works out to be rupees 3,84,800. And the taxability part under new, the taxable income is 5,77,300 and tax is 20,230. Under existing, taxable income is 3,84,800, which is below rupees 5 lakh and thus eligible for tax rebate under section 87A. The new tax regime saves taxes for the taxpayers who don't claim deductions or exemptions. If you have found this video useful, please like and hit the subscribe button.